Hello everyone, welcome to EduTap and welcome to today's Finance 360-degree session. So in today's session, we are going to discuss a very important notification of the RBI. And the Reserve Bank of India has released the directions regarding the fraud risk management. So this is very important from the examination point of view, because here different data points have been given, different facts have been given that if there is a fraud that is happening in a bank or the All India Financial Institution or the NBFC, so how that fraud has to be dealt with, what are the how the early warning signals have to be dealt with. So all of this we are going to discuss in today's session, and this is very important from your general understanding as well as from your examination perspective, as there is the news that there is RBI grade A that can also happen soon. So you can understand that these RBI notifications, the RBI press releases will be important as it is the RBI examination, okay, RBI related examination. So for RBI grade A or RBI grade B, the notifications, the press releases, they are important, okay. This time in phase 1 there were less number of questions, only 6 to 7 questions were from the RBI website, but in the phase 2 there were descriptive questions, there were multiple questions from the RBI notification, RBI press release, okay. So for RBI grade A, for RBI grade B, the notifications, the press releases you have to cover. And in today's session you will understand that what is this fraud risk management directions. So here you can see that this is the notification of the Reserve Bank of India, RBI, Commercial Banks Fraud Risk Management Directions 2026. Okay, for the commercial banks, now there are separate notifications. So there are 5 to 6 notifications that are released. One for the commercial banks, then for local area banks, small finance banks, payment banks, RRBs, the urban cooperative banks, for the All India Financial Institutions, for the NBFCs. So for all these different entities, there are separate directions, there are separate notification that the RBI has released for the fraud risk management. Okay, now in this one session, I've brought all these different notifications and whatever are the similar points that have been written together, so that you are not confused and you do not have to go through multiple different notifications in this one document. All these 7-8 notifications, they have been compiled and the understanding has been provided accordingly. So first of all, give me a thumbs up if I'm clearly audible and I'm clearly visible. So I hope you are preparing well for the RBI examination. So now let's start with the article for today. So Reserve Bank of India Fraud Risk Management Directions 2026. First of all, what is this fraud? Okay. So fraud in the banking system can arise at different stages. It may begin with unusual transactions from some account, okay, that without the knowledge of the account owner, the money has been taken out or the money has been transferred or such. Manipulation of financial records, misuse of loan funds, forged documents, digital payment frauds, or the involvement of employees and external professionals in any kind of fraud where the money is being misused or the money is being not like the deposits that are coming in the bank, they are being misused. So this is the idea that fraud in the banking system can arise at different stages. This is the fraud that is happening in the banks, or that can happen in the banks because of the involvement of employees or the external professionals or the external entities. Now to curb this, because if the fraud is happening in the bank, it can be very harmful, very risky for the bank or for the regulated entity under the RBI. So to curb this, banks need a complete framework, a detailed framework that enables them to prevent suspicious activities, identify the warning signals early, investigate them promptly, and report confirmed frauds within a prescribed period. So this is the idea that frauds, they are not very uncommon in the banking system. The frauds can happen because the banks, the NBFCs, they deal with a lot of money. So yes, frauds can happen that can be with the involvement of the employees or the external professionals or some other entities, they are doing the fraud. So in the banking system where a lot of money is involved, the frauds are possible. And in this case, the RBI has given this fraud risk management direction so that there is a complete framework that how the banks, how the NBFCs have to deal with the fraud, within what time the fraud has to be informed or a report has to be sent. Okay, so now to establish such a framework, RBI issued the Reserve Bank of India Commercial Banks Fraud Risk Management Directions 2026, and such directions are also released for local area banks, RRBs, urban cooperative banks, small finance bank, All India Financial Institution, for the NBFCs. Okay, so these directions are released for the different entities. So the direction came into effect immediately, and the commercial banks, the applicability of the directions are on the commercial banks, small finance bank, payment bank, urban cooperative bank, local area bank, the rural cooperative banks, RRBs, all India financial institution, and NBFCs that are in the upper layer, middle layer, and in the base layer. In the base layer with asset size of 500 crore and above. So this is the important point, that the NBFCs are divided into 4 layers: base layer, middle layer, upper layer, and the top layer. The higher you go, the more riskier the NBFC is. Okay, so for base layer with asset size of 500 crore and above, for middle layer and upper layer, these fraud risk management directions will be applicable. It is said that the top layer will usually remain empty. Okay, any confusion till now? So now, key highlights of the direction. So governance and principles of natural justice. So every bank must formulate a board approved fraud risk management policy covering the fraud prevention, early detection, investigation, staff accountability, monitoring, recovery, and reporting. Now, this is important that the board must review the fraud risk management policy at least once every 3 years or more frequently if considered necessary. So, first of all, every bank. Now, RBI has given the broad directions, RBI has given the broad framework, but the bank has to make the board approved. There should be a board approved fraud risk management policy that should be framed for each and every bank, that how the staff accountability will be identified, how the monitoring will be happen, what will be the early warning signal and such. So board approved policy should be there, that should be reviewed every 3 years at least, or the board can review it earlier also, but minimum like 3 years, like there should be the review that should happen. Once the suspicious activity is detected, the account should directly be called the fraud account, or the staff member should directly be called the fraud member. No, right? There should be some investigation that should happen, right? So once suspicious activity is detected, the bank cannot directly classify a person, entity, or account as fraudulent. There should be a show cause notice that has to be sent to the entity or to the person, and the person has to be given, or the entity has to be given 21 days to submit a response. So bank must issue a detailed show cause notice explaining the transactions, actions, or events on the basis of which fraud classification is being considered, and the person or the entity must be given at least 21 days to submit a response to the bank or to the entity. Now, each bank, NBFC, all India financial institution, they have to have a special committee of the board for monitoring fraud cases. Okay, so to strengthen the board level supervision, every bank, every NBFC, we will discuss that they must constitute a special committee of the board for monitoring and follow up cases of fraud. So this is SCBMF, that is the special committee of the board for monitoring and the follow up cases of the frauds. So this is SCBMF, that is every bank should have this committee. Composition of the committee for commercial bank, small finance bank, payment bank, local area bank, RRBs, and all India financial institution, the SCBMF must consist of minimum 3 members. There can be 5, 10 members, there can be like 6 members and so, but minimum there should be 3 members of the board comprising 1 whole-time director. So in the SCBMF, it should consist of minimum 3 members from the board. Minimum 3 members from the board. 1 whole-time director, 1 whole-time member basically in the board, 1 whole-time director, at least 2 independent directors or non-executive directors. So there should be minimum 3 members of board in the SCBMF, and 1 should be the whole-time director, and the 2 should be the independent directors or the executive directors. Okay, non-executive directors, sorry, that do not hold any executive position. The committee must be chaired by 1 of the 2 independent directors. So 1 of the 2 independent directors should be the head of the committee or should chair the committee. Composition of UCBs and RCBs, so urban cooperative banks and for the rural cooperative banks, the SCBMF must consist of minimum 3 members from the board. The same idea is consistent here, that minimum 3 members from the board should be the members in the SCBMF. So 1 chief executive officer, so 3 members from the board means the chief executive officer here, directly the CEO, should be a member of the committee, as well as 2 directors having suitable banking experience or relevant professional qualification in law, accountancy or finance should be member of the SCBMF. So under the UCBs and the rural cooperative banks, there should be 3 members from the board. One will be the CEO directly, the chief executive officer, 2 directors having suitable experience. Now out of the 2 directors, the one will become the chair of the committee. So the committee must be headed by one of these directors. Okay, now tier 1 UCBs. Now the UCBs are also divided into 4 tiers. Okay, tier 1 UCB, tier 2 UCB, tier 3 and tier 4 UCBs. So the UCBs are divided into 4 tiers. Okay, now the higher you go, that means the more deposits the UCB can take, the larger the urban cooperative bank is. So tier 1 and tier 2 are the smaller UCBs, are smaller urban cooperative banks. So tier 1 and tier 2 UCBs and the rural cooperative bank, if the rural cooperative bank has deposit below 1000 crore, they shall have the option of constituting a committee of executives. So committee of executives, so rather than having this SCBMF, they can have the committee of executives. It must have minimum of 3 members from the board. At least 1 member must be the CEO. At least 1 member must be the CEO. So I hope this is clear that if the smaller UCBs we are talking about, if the RCB, Rural Cooperative Bank, is there with the deposit below 1000 crore, so in this case, there can be a committee of executive. Composition of NBFCs, so SBMF, same. Like the UCBs, there should be 3 members of the board. One should be chief executive officer or the managing director, where the CEO is not a whole-time director. 2 independent directors, one of the independent director will head the committee. Now in the middle layer and base layer, because these are the layers where the smaller NBFCs are there. First base layer, middle layer, then upper layer, and then top layer is there. So the smaller NBFCs are in the base layer and middle layer. So they can constitute a committee of executives also, like the tier 1 and tier 2 UCBs and the RCBs. So it must have 3 members. 1 member should be the whole-time director. Okay. Now, SCBMF, it will oversee the effectiveness of the fraud risk management, review the fraud cases. It will have the basic power and the responsibility also to recommend the measures strengthening internal controls, identify the delay in fraud detection and such. In addition, a senior official of at least the rank of general manager or equivalent must be made responsible for monitoring and reporting the frauds. So this was regarding the committee that has to be constituted by each and every entity. Now, coming to the early warning signals and red flagging of the accounts. So the first operation stage of the framework is identification of the early warning signals. So rather than waiting for a huge fraud to happen, as soon as you are able to identify that, okay, this account has such kind of discrepancy, there is some discrepancy in the accounts. So as soon as the early warning signal is identified, the action has to be taken immediately. The bank should not wait, or the entity should not wait for a big fraud to happen. Okay. So the first operation stage of the framework is the identification of the early warning signals. The EWS framework applies to tier 3, tier 4 banks. So EWS framework, it applies to the big banks, basically tier 3 and tier 4 urban cooperative banks. In case of RCBs, it applies only to the rural cooperative banks that have the deposit size of above 1000 crore. In case of NBFCs, it applies only to the NBFCs which are in the upper layer and the middle layer, not on the base layer. So the early warning signal has to be applied by these banks. Okay, a board level. Now, if the early warning signals framework is applied, so the board level committee has to be constituted. That is the risk management committee. The risk management committee has to be constituted, or any other committee having similar functions. It shall oversee the effectiveness of the framework for the early warning signal, that how effective the early warning signals are, how much they are being identified. The senior management shall be responsible for implementation of a robust framework for EWS. Now, for the commercial banks, now we have talked about the UCBs, the NBFCs and such. Now every commercial bank, RRBs, local area bank, payment bank, small finance bank, IFI must also have a board approved early warning signal and red flagging of accounts. They do not only need the early warning signal, they also need to red flag the accounts, because these are the banks that need to have the red flagging of accounts under the oversight of the risk management committee of the board. So RMCB, that is the risk management committee of the board, will approve the EWS indicators. What are the signals used by the bank that will be used by the bank for monitoring loan accounts and other banking transaction? RMCB shall also prescribe a time limit for examining every alert and red flagging of the accounts. Okay, any confusion till now? So now, reporting and resolution of red flagged accounts. Once the account has been red flagged, it doesn't mean that this account is fraud account. It might be that the account discrepancy was because of just some accounting error. Some data was omitted mistakenly because of the clerical mistake. Okay, so as soon as we have the early warning signals, we are doing the red flagging of accounts, we cannot directly say that okay, this account is a fraud account. No, an early warning signal does not automatically mean that fraud has occurred. Okay, so red flagging of the account is required to identify that account, to be keeping watch on that account. So red flagging of account is required, but it should not directly lead to be considered that this account is a fraud account. Once an account is classified as red flag, the bank must report its status on the RBI Central Repository of Information on Large Credits within 7 days. For accounts with an aggregate exposure of 3 crore or more, including both fund-based or non-fund-based exposure, guarantee has been given on that account, or there is some fund-based exposure, some kind of guarantees there and such, or there is fund-based exposure that is 3 crores or more. So the bank must report the account through the red flagged account return on the CRILC platform, through the RBI's platform, within the same 7 day. Like basically, if an account has been red flagged, so even though the fraud has been not confirmed, but if the account has been red flagged, so RBI's Central Repository of Information on Large Credit has to be informed within 7 days. That is the idea. And for accounts with aggregate exposure of 3 crore or more, in this case, the bank must report the account through the red flagged account within 7 days. Once an account is red flagged on CRILC, the bank must ordinarily complete the process of classifying the account as fraud. That if fraud has happened or if fraud has not happened, this kind of identification or removing its red flagged status within 180 days. So as soon as, like, if you have identified an account as red flag account, within 7 days, report it to the CRILC, and then within 180 days, I either say that yes, this red flag account is actually the fraud account, or we are removing its red flag status. Either of this will happen. Either it is a fraud account or it is not a fraud account. This has to be identified within 180 days from the date on which the account was first reported as red flag on CRILC. So cases remaining under red flag status beyond 180 days must be placed before the committee that was constituted for each and every entity. Now, the above provisions, they are not prescribed for payment bank, RRBs, for urban cooperative bank, rural cooperative bank, and NBFCs. This 7-day, 180-day timeline, the information that has to be sent to the CRILC, this is only for the commercial bank, all India financial institution, that are the big entities. Okay, so that is the idea. So I hope this is very much clear, that there should be reporting and resolution of red flagged accounts. They have to be reported within how many days? They have to be reported within 7 days to the CRILC, and the resolution of the red flagged account should happen within 180 days. Within 180 days, either they will be identified as fraud or no fraud. Okay, this is the idea. Now, staff accountability, and now where a law enforcement agency initiates an investigation, let's say some station like law enforcement agency has initiated, CBI and such, has initiated the investigation in relation to a borrower account, the bank must immediately red flag that account. Even if the bank was not able to identify the account as the red flag account, but there is a law enforcement agency that has initiated the investigation, so the bank has to also identify the account as red flag account, okay, and complete the fraud classification process within the prescribed timeline. Now, coming to the staff accountability and penal measures. So, public sector banks and government banks, government NBFCs. So, public sector banks, that means they are the government banks, government NBFCs. Because here government is involved. See, if the fraud is happening in a private sector bank, so the money of the private individuals are involved. Okay, let's say there is a bank owned by XYZ. Now, this is a private bank. So, if a fraud is happening, this XYZ will bear the responsibility, or this XYZ will have to cover the losses. This is a private entity. But when it comes to the public sector bank or the government NBFCs, here the government is responsible. And if the losses are happening, if the fraud is happening, the government will have to cover that up. So that's why it is said that for the public sector banks and the government NBFCs, they must examine staff accountability, because these are the government employees basically in the public sector bank and such, in accordance with the guidelines of the Central Vigilance Commission. In public sector banks, government NBFCs, fraud cases involving 3 crore and more must also be referred to the advisory board for banking and financial frauds. Okay. So advisory board examines the role of officials at all levels, because these are the government employees, including serving or former officials and whole-time directors who are involved in the fraud, or if they are not involved with the fraud. Once a person or entity is classified and reported as fraudulent, the consequences extend beyond the immediate loan account, and let's say the person was involved in the fraud. So it's not that only this fraud account will be caused, that okay, in this particular account the fraud has happened, so we will resolve the situation. No, the person will be considered fraudulent, and the person involved in all the accounts will again be seen. Okay, so all the accounts that this person has engaged in, for all the accounts, then the reporting and the investigation will start, not only in the initial account but in all the accounts. The investigation will start. So the consequences extend beyond the immediate loan account. The person or entity along with associated person and entities will be prohibited from raising funds. Let's say that a borrower, here the staff is doing well, or the staff is not involved in any fraud, but the borrower is involved in the fraud. The borrower that has borrowed the money from the bank, it is involved in a particular kind of fraud with the bank. It is not giving the money to the bank, or it is like it is doing some fraudulent transactions from the bank account. So the borrower, that is XYZ, let's say, or ABC, this borrower, all the accounts related to this borrower will be investigated if it is identified that yes, this borrower is doing the fraud. And the borrower, the person or entity along with associated person and entity, will be prohibited from raising funds from the bank. Now the debarment period, this borrower or the related entities or the associated person of this borrower, they will be debarred. They will be debarred from taking loan from the bank for 5 years period from the date of full repayment of the defrauded amount. So if the borrower has done fraud with the bank, so for 5 years from the full repayment of the defrauded amount, for 5 years the borrower and the associated persons will be debarred from the bank. So this is the idea, where the matter is resolved through a compromise settlement. The 5-year period will begin from the payment of the agreed settlement amount. The other regulated entity shall initiate and complete the examination of staff accountability. So we have discussed about the staff accountability. The Central Vigilance Commission is there in case of public sector bank and the government NBFCs. In case of 3 crore or more, there is advisory board for banking and financial frauds that will be involved. In case a person or entity is classified and reported as fraudulent, let's say a borrower is classified and reported as fraudulent, so not only the borrower but the associated person of the borrower, their accounts will also be seen, that their loan accounts, their other accounts will also be seen, that are there any other frauds that are happening. And then the borrower will be debarred for 5 years from the from the full payment of the defrauded amount. Okay. So this is the idea. Now, reporting of frauds to law enforcement agencies. So once fraud is confirmed, the bank must report it immediately to the appropriate law enforcement agency. So before the fraud is confirmed, when there is the red flagging of account, then only the RBI's CRILC has to be informed within 7 days of red flagging the account, and within 180 days the fraud has to be identified. Once the fraud has been identified, then the appropriate law enforcement agencies have to be involved. Okay, so for the private sector bank, foreign bank, small finance bank, payment bank, local area bank, if the amount involved is below 1 crore, so agency to which the complaint must be lodged is the state or union territory police, the local police basically. Now, if the amount involved is 1 crore and above, the state or union territory police and the serious fraud investigation office under the Ministry of Corporate Affairs. If it is related to public sector bank, RRBs, IFEs, All India Financial Institution, below 6 crore of the fraud, state or union territory police, and 6 crore and above, Central Bureau of Investigation, because here the bank is public sector bank or the RRB or All India Financial Institution. So if the fraud is 6 crore and above, so CBI will be involved, Central Bureau of Investigation will be involved. Now, banks and applicable NBFC have also been advised to mandatorily report frauds involving 1 lakh or more to law enforcement agencies. So this has to be informed to the law enforcement agencies. Now, consortium lending, where multiple banks. Now we have identified that okay, how one bank will take the action, that okay, the borrower will be debarred, the fraudster will be debarred from the bank for 5 years from the full repayment of the defrauded amount. Let's say the borrower did a fraud. Let's say the borrower did a fraud. Okay, so the borrower did a fraud and this fraud has been identified. So borrower's other accounts will also be seen by the bank that in other accounts is there fraud or not. So in whichever account there is fraud, that will be identified. Now the borrower will have to pay the defrauded amount, will have to pay this defrauded amount or the settlement amount. And after paying this amount for 5 years, the borrower and the associated persons will be debarred from the bank, okay, or the borrower will be debarred from the bank. So this is the idea. Now coming to the next point, that is consortium lending. So now multiple banks are involved. Consortium lending means a huge amount of money is being lent by multiple banks coming together. So that is consortium lending arrangements. So here consortium lending, in this case, if there are separate complaints may be filed by individual consortium members where separate offenses have been committed, that the borrower has committed different offense against this bank A, different offense against bank B, or there are different borrowers that are doing the different fraud transaction. Okay, so separate offenses have been committed, so they will be reported separately. But let's say where fraud forms part of the same act or transaction, a borrower have taken a loan from the consortium members. Now this loan amount has been fraud amount, or the borrower has done the fraud in this loan case or in this account case. So here only one complaint will be lodged. Okay, one consortium member may lodge the complaint because this is related to one transaction. So if there are separate offenses against the separate consortium members, they will separately lodge the complaint. They will separately report the complaint and the fraud. But if the consortium members all are involved and the fraud forms part of the same act or transaction related to the consortium members, so here one consortium member has to lodge the complaint. The remaining members must assist the complaining bank. That's it. The payment bank, UCB, RCB, NBFC's directions do not contain this specific consortium complaint provision. Now coming to the only a few points are left. So reporting to RBI and fraud registries. So RBI has to be informed, that is the basic idea, payment system related disputed fraudulent transactions. So if it is related to payment system, the RBI Central Payment Fraud Information Registry has to be reported. In case of housing finance companies, reporting is to be done to the NHB. This provision does not apply to Urban Cooperative Bank and NBFCs. So other banks, they have to inform their payment system related disputed fraudulent transactions to the RBI's Central Payment Fraud Information Registry, where such a transaction is subsequently established as a fraud. So before it was, when it was identified, when it was disputed, it was informed to RBI's Central Payment Fraud Information Registry. When the fraud has been decided that yes, fraud has happened, then it has to be reported through the fraud monitoring return. Okay, so that the information is reflected in the Central Fraud Registry. Banks must furnish the fraud monitoring return for every individual fraud case, irrespective of the amount involved, and this should be done within 14 days from the date of classification of the incident or account as fraud. So when the fraud is disputed that yes, the fraud has happened or not, then it has to be reported also, but to the RBI's CPFIR. Okay, CPFIR. But when the fraud has been confirmed, then it has to be reported under the fraud monitoring return. That is it. Now, closure of reported fraud cases for limited statistics. See, why we are closing the reported fraud case? So for limited statistical and reporting purposes, for the reporting purposes, a bank may close a reported fraud case involving an amount of up to 1 crore, provided staff accountability has been examined, disciplinary action has been taken wherever required. Now the above provision applies to commercial bank, small finance bank, payment bank, local area bank and IFEs where amount up to 1 crore is involved, and for NBFCs this limit is 25 lakhs, that is amount up to 25 lakhs is involved. Such limited closure is permitted where the investigation is continuing by the law enforcement agencies, by the police or by the CPI, the investigation is continuing, or the charge sheet has not been filed for more than 3 years from the date of registration of FIR, because you know that the cases take time. The charge sheet has been filed but the trial has either not commenced or has remained pending for more than 3 years from the date of registration of the FIR. So in these cases where the cases are pending from the police side, from the CBI side, from the judiciary side, so if the cases are pending from their side, then the bank will close the cases from its own side, or for the statistical and reporting purposes, the bank may close the reported fraud case involving the smaller amounts. Okay, so this is the idea. Now, legal audit of large value loan accounts. So, whenever the loan is of 5 crore or more, so banks must subject the title deeds and related title documents of all credit facilities of 5 crore and more to periodic legal audit and re-verification that the money has gone to the rightful owners or the rightful entities, and the money is being used for the rightful purposes for which the loan was given. If the loan was given as the home loan, so the money should be used for the house only. If the loan has been given for a particular business, so loan should be used for the business itself only. Okay, so banks must subject the title deeds related documents of all credit facilities of 5 crore and more to periodic legal audit and re-verification. The 5 crore limit is prescribed for commercial banks and IFEs. In case of small finance bank and the other NBFCs, housing finance companies and such, the limit is 1 crore. So if the title documents, if the loan is of 1 crore or more than that, 1 crore or more than that, then the credit facilities have to be periodically done the legal audit and re-verification. Okay, so I hope this is very much clear. So basically, whenever there are the credit facilities of 5 crore or more, there should be periodic legal audit and re-verification that should be done by the commercial bank and IFEs. In case of loan amount of 1 crore or more, the other like other smaller banks and the NBFCs, they should also do the re-audit and the re-verification that the amount has gone to the rightful owner and is being used for rightful purposes. Now this is the end of the session. Last we have to discuss reporting of theft, burglary, dacoity, and robbery. So, directions also prescribe a separate reporting mechanism for physical crimes involving bank premises, cash, or property. Instances of theft, burglary, dacoity, and robbery, including attempted cases, must be reported to the RBI's Fraud Monitoring Group, Department of Supervision, immediately and not later than 7 days from the date of occurrence. So, this is the idea. Okay. RCBs, that is the rural cooperative banks, and RRBs, they must report such theft to the NABARD, while the HFCs must report these incidents to the NHB. That's it. Now, banks must also submit a quarterly report covering all such incidents during the relevant quarter. The quarterly return has to be submitted within 15 days from the end of the quarter. Okay. Chalo. So this is the end, and here we have discussed all the important points. For the different banks, there are different notifications that the RBI has released, but in this one direction, I have explained you the directions for all the different banks. Okay. So the most important points are just that the board approved fraud risk management policy should be there at least once every 3 years. It has to be reviewed. Show cause notice should be there, and at least 21 days should be given for the appearance under the show cause notice. Okay, or for the response. Now there should be a special committee of the board for monitoring fraud cases. For all the entities, there should be 3 members of the board, 1 whole-time director and the 2 independent directors. Out of the 2 independent directors or out of the 2 directors, 1 director will head the committee. That's it. Okay, for all the, like, there are some smaller changes, but usually all the banks and BFCs, they must have this committee. Okay, now the smaller urban cooperative banks and the rural cooperative banks and the and smaller NBFCs in base layer and middle layer, they can have the committee of executives rather than having the SCMBF. Okay. Early warning signals, red flagging of accounts. So early warning signals, all the banks, they have to do the early warning signals, but the red flagging of account, it is required for the commercial banks, RRBs, local area banks and such. If the red flagging of account, the reporting should happen within 7 days of the red flagging of the account, and it has to be reported to the RBI's CRILC, and within 180 days the red flagged accounts have to be resolved with. Okay. So, staff accountability and penal measures, especially in case of public sector bank, government, NBFCs, staff accountability should be in accordance with the guidelines of the Central Vigilance Commission, and where the amount is involved is larger, there the another committee or board will also be involved. In case a borrower or a person or an entity has cheated the bank or is doing the fraud, so all the associated persons and the borrower's accounts, other accounts will also be gauged, and it will be seen that the fraud is happening in the other accounts also, and the debarment period will be 5 years from the date of full repayment of the defrauded amount. Then the legal enforcement agencies, we have discussed how they will be informed, for what amount they will be informed and such. Then we have discussed about the reporting to RBI and fraud registries in case of payment system related dispute. They will be informed or they will be reported when the disputed fraud is there. The fraud is not confirmed, it is disputed, the case is going on. So it will be informed to the central payment fraud information registry. Once the fraud has been confirmed, it will be informed to fraud monitoring return. Then closure of the reported fraud cases. If the fraud cases are of the smaller amount and they are pending at the side of the police or the judiciary, then they can be closed, okay, from the banking side. This is it. Legal audit, then we have discussed that for the large loan value accounts, the audit and the re-verification should keep on happening, should be done periodically. Then this is the end. Now in the course, you are provided these infographics so that you can revise in a faster manner board level IT strategy, like board level. Okay. So here you can see the key highlights of the directions. So the board approved fraud risk management policy, the principles of natural justice, the show cause notice, where within 21 days the application, like the response has to be sent. Okay, the board approved fraud risk management policy has to be reviewed within 3 years. Special committee of the board for monitoring fraud cases. So there should be a special committee of the board for monitoring fraud cases. So special committee about that, whatever information is required has been written down here. So these infographics you get in your course, so that you can revise through these infographics. Okay, you can easily revise through the infographics and you can focus on the most important data points. Here I've provided you this infographic, one of the infographics, so that you can revise. Otherwise I've explained all the important points that are required. Okay, so this is for today. This is the first question. I hope you will be easily able to answer this question. So under the RBI Fraud Risk Management Directions 2026, banks are required to have a board-approved fraud risk management policy. How frequently must the board review this policy? How frequently the board has to review the board-approved policy? So I hope you will be able to answer this question. When a bank is considering classifying a person, entity, or account as fraudulent, the principles of natural justice must be followed. There should be a show cause notice that should be sent and minimum period should be given for the response. What is this minimum period for response of the show cause notice? Again, a very easy direct question. I hope you will be able to answer this question. So this is it. I hope you enjoyed the session, and the PDF of the session you will get in the Telegram channel of EduTap. So if you want the PDF of the session, you will get the PDF. You will get this PDF in the Telegram channel of EduTap, and try to answer these 2 questions. These are the homework questions. Do try to answer them in the comment section below. So this is it. Thank you everyone. Thank you for joining. I hope there is no confusion that is there. But if there is still any confusion, you can write in the comment section below. Okay. So thank you everyone.